Hello folks, I'm L.A. Little, and this is your daily TA wrap. Well, we take a look at these markets and we do it from a neoclassical perspective and ask ourselves what happened today and what does it tell us about tomorrow. I do a show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. I want to start off the show, probably all of you already know, we had a breakout today, market breaks higher. We've been talking about staying, with the prevailing trend, absence of data, of signals to tell us otherwise, right? I mean, you have to defer to the trend. I don't know how many times I've said that. It's been 2-3 weeks sideways, consolidation, it turns out, or certainly it appears that that's what it is now. And the break higher today, you break out on the listed issues, you're right on the cusp of doing so on the OTCs, and the Russell's probably going to play catch up now. But I want to start out with 2 quotes today that just, to me, are, I don't know if they're amazing, but they're kind of indicative of all the doublespeak, in reference, or deference we should say, to 1984. I believe that supporting the recovery today is the surest path to returning to a more normal approach to monetary policy. This was Yellen's prepared written testimony, came out after the bell today. You got to be kidding me. So we're going to do all these measures that we're doing, not just us, but central banks around the world, essentially taking debt off the market and replacing it with quote-unquote good money, and somehow that's going to solve all of our problems and get us back to something normal. Right. I don't think so. I mean, yeah, it can create, we're talking big picture here. It can create the appearance of that for some period of time. But that money, that debt, it's got to go somewhere, right? And the only way debt ever gets solved is you either pay it back, you deflate it away, or you default on it. Right? The whole point, you hear them target inflation 2%. We have to inflate? Is that the way the world is now? There has to be inflation for us to manage? I understand the whole cycle of deflation, and you get into the deflationary spirals, quote unquote, and you never get out. Yeah, I understand that, but I don't know. it just blows my mind when I see something like this. And then we go over to Helicopter Ben. A more open Fed, in my view, is both a more effective and more democratically legitimate institution, democratically legitimate. Okay, so how in the world did we even get a Federal Reserve? Where did it come from? Right? I'm looking for, and I hadn't even looked for it here. Somewhere on here I have, I don't know where it is right now. It's in one of these, but, there's a book that talks about how the Fed came about, Creature from Jekyll Island. If you want to understand where the Fed came from, how it came back in to existence after being abolished for something like 70 years, it wasn't quote-unquote democratically. I mean, that's nonsense. It was backroom deals. People got together, big bankers from the East Coast got together and put together a plan to push this thing through Congress and get it approved again and get the Fed back out there. That's what that book is about. Of course, the book is a long book, 600-700 pages. It's an interesting read. It's a long read and a little bit repetitive at times. But if you want to understand where the Fed came from, go read that. If you want to understand central banking in America, go back and read Andrew Jackson's biography. I don't have it handy here with me. It is a good book. I can look it up if you want. Shoot me an email and I'll give you the well, it's on when you can go on the book reviews and see it. It's on there. Central bank, he fought it and fought it and fought it, and the Fed did everything possible to bring Jackson to his knees. And this Fed will be no different if they try to get rid of it. Right? They'll sacrifice the economy, the people, for their own existence. It's an institution created for the benefit of the large banks, period. That's what it's for. So don't give me democratically, that's nonsense. And I'm sorry, I had to go off on that, but I see those kind of quotes all the time, and it's just so much nonsense that it perturbs me at times. Let's go look at the Dow, up 71, 15,821, new highs. S&Ps tacked on 14.3, they're at new highs, 1782. Composite within a point of the highs, 396.5 and a half, 45 and a half higher. NDX 40 higher, 3405 and a half. The Russells trailing, although they were up more today than the listed issues. 10 and 3/4, 11, 12. They're going to try to make the run and catch up with the other guys. Gold bounced back slightly. It's up quite a bit after hours, 1282 now. I talked about that gold setup. I actually had it on a 1-minute trade on the TNT, on the 1-minute trade here on the front page on the videos. You can check it out there. I talked about it. It was a good setup. Bonds were set up the same way. Matter of fact, I talked about bonds right here today, gold and bonds, in a Market Watch article. If you want to check that out, you can read it here or on Market Watch. Elsewhere, they were pretty flat all day. Dollar was reasonably flat. Silver, gold, not that much of a difference. Oil, was flat. I saw they came out inventory numbers after hours. Tomorrow will be an interesting day for oil. Somebody asked me about it last night, the USO. I gave you my impression that I expect it's going to try to bounce here and then come back. It did that today. We'll see how it trades tomorrow now that the inventory numbers are out, and higher again. Should put more pressure on it, but if they can't take it down, then what are they going to do? They're going to take it back the other way. So that will be a good primer on what's coming. Let's flip over and look at the sectors, so forth, and see what we got here. Or not the sectors, but the indexes themselves. So we'll start with the S&P. So you got a breakout. You're over the highs, right? We've been watching for clues, okay? And the clues have been minimal. I mean, we have been sideways now for, what is this? About 2.5 weeks on this one. Breakout today, over the top, right? S&Ps breaking higher. What does that mean? Well, What it means is that that ABCD structure, and we can draw it in here if you want, that ABCD structure that was in place, the one from here to there, back down, right, and then off the chart, that structure is in place. And where does that measure to? Well, it's not small. It measures up to, let me get the numbers for you right quick, 1859. I mean, we are trading at 17, what are we at, 1780 or something, right? 17, I can't even see my numbers. Let me get this up here so I can see them. 1782. That's another 60 points, 70 points, right? That's not something to sneeze at. That structure has been in place. It's been holding. It's ready to try to make another move and go on up and fulfill it. And if you take this and you pull it over and you look at the monthly chart, right, on the monthly chart here, you actually have an ABCD structure, and we can draw that one in as well. You have an ABCD structure here that measures from this price point to there up, and that one takes you to about 1837, I think it is, 1837. That one's also in place, and that one also is probably the one that's going to take us next, if in fact we're going to get a push up here. What's important to see, now that we have the breakouts here and on the Dow, is to see these things start to pull away now, right? In other words, a continuation of the move, which legitimizes it and actually puts those targets into play. Here's the Dow Jones. It had already broken over this high, and now it's starting to do that extension, just what we're talking about. And if we look at it, if we pull it over here on the weekly, you have the same thing. So you have a breakout here. That usually gives you a fast move to the upside. Of course, with these large indexes, fast move is relative, but that's the setup on the indexes. If we go look at the laggards, at the NDX and the NASDAQ itself, remember we talked about the ideal here that we wanted to see a break of that ledge on the top side. This morning, you know, we started down. We were down here, and we were actually pressing lower at the open off of Asia selling off, in particular China selling off, because there wasn't quote-unquote solid language in the I don't know what the statement is that comes out of their central committee over there, but whatever it was, there wasn't language in there that was specific enough, and people sold off the market. All of Asia down 1.5%, 2%. Europe, same thing. Sell off another percent. What do? We start down about half to 3/4, and we go straight up, right off the bat, straight up, never even look back. We were looking at it in the trading room today. Let me bring it up and put the dollar, not the dollar, but we'll put the NDX up. You gap down, you go straight up all day long, right? One little pause, another ABCD structure, another pause, another ABC structure, two of them. You know, if you're trading this intraday, we were looking at it and we were actually trading it intraday long. We saw about right here that it was time to get on this thing. You got the ABCD structure to here, not much of a pullback, and then a fulfillment. That fulfillment actually took it to about right there, and then not much of a pullback, and then another one, right? Two of them, one here and one there. They both played the full extensions. Those are beautiful days when they do that, and that's exactly what took place today. So that was the NDX. NDX got over the area that we talked about was critical, and now it's poised to break its swing point high. We've got the IXIC, which is the NASDAQ composite, doing the same thing. And I always hear this thing about, okay, the volume's not there. Folks, the volume doesn't matter. What matters is you get over price, and then if you get over it in a suspect way, you want to look at that retest regen and see if it's going to regenerate higher. In other words, do the sellers show up? This market keeps going higher because the sellers don't show up. It's not because there's just an abundance of buyers out there, right? There isn't. But there's more buyers than there are sellers in terms of quantity, and that causes higher prices. Yeah, it will end at some point, but until it does, right, you just got to pay attention to what's happening, and you got to stick with it. So that's the story there. The only laggard now is the Russell, but you know, even here on the Russell, that ledge that we were talking about on the Russell, if I could draw it in straight, is actually a little bit higher right up in there. That got broke as well today. So you're over that area. This thing's going for the highs as well. So all the indexes starting to break higher. Let's flip through the sectors and see what we got there. And I suspect we're going to have the same thing. I haven't had a chance to look over them yet. So let's pop through them real quick and see what they look like. And I'm actually going to pull it back so we can see the weekly as well. Okay, IYT going for the top. Volume starting to expand again. Here we go. 127.61. And it's right there. That's going to break out tomorrow. Semiconductors. The semis were the ones that were, you know, giving us pause. Looked like they were going to try to pull back. Those semis actually had some volume associated with them as they pulled back. But now it appears as if they're going to run back to the top. So let's see, because they were strong all day today. Come on. All right, so here's the weekly. You know, again, talking about the volume as this draws. This volume from here, right? This volume, I mean, come on, this is not even close in terms of expanding volume, right? It's not expanding, yet your price is going this way. Classical TA folks will tell you that's not going to last. Well, folks, that stuff can last a long time, right? As long as you get breakouts like here, and then you come back to retest and your volume doesn't expand, right? Compared to either the breakout bar or compared to the swing point high bar, if it doesn't expand and can't get back under it, it's going to go higher, and it's going higher based on just a lack of sellers, and that's what's happening. So here we go, volume's coming into it here on a daily, going back to the highs. XLB probably broke over the highs today. Let's see. I don't know why this is so slow tonight. Tell you what, we can look at it here in the meantime, because the numbers won't be any different on a short-term basis. So volume's there, and trying to get over the highs. It's going to test the highs tomorrow. XLE, okay, so the XLE, now the XLE is the only one that was telling us last night that we may get a push back to the other side. And what does it do? It comes right back up. That's the semis. Let's go back to the XLE. What does it do? If I can get it in here. Here we go. Yeah, it comes right back up. It's going to test it tomorrow. So the big bar on this one is right here. That's going to be the test tomorrow. We're going to try to get over it. If we get over it, it's back to the highs. It's the same sort of scenario that we've seen. Looking at the XLF. And yes, so remember we had some nice volume come off on this run higher, right? We went up and tested highs, couldn't break them on the weekly. Now we dip back down, and if you haven't noticed it yet, you can certainly see it here, and I'll delete these so that I can draw it in. All of these now, almost every one of them have ABCD structures in place, right? And some of them are already in motion, right? Some of them are already starting to take place. But these ABCD structures are gonna push quite a bit higher if they break. And right now they all look like they're going to try to get back up there and test. This one, volume comes in, that looks pretty good. Does look to go test the tops. XLI, this one hasn't even hardly pulled back. Yeah, I mean it's at new highs already, volume expanding. XLK. pull this back in, so since we're only looking at this one. XLK, yeah, breaks out. XLP should be breaking out again. If it hasn't, it's going for the highs. XLU just coming back up, nothing special there. XLV broke out today, yes it did. Volume is not there, so probably will retest regen tomorrow. XLY breaking out, and it has the volume, it looks like. So sectors are all saying the same thing. There's nothing different there. Let's go over to the Ox markets, and I want to pull in and look first at the dollar. So the dollar pulls back a little bit more today, but boy, it's reluctant. Doesn't want to come back. Now, I'm going to pull up the other charts here, if we can get them up. Yeah, here we go. So, yeah, it still looks like it wants to come back in to this area right here, right? That's where it's trying to get back to. So, a little bit more of a pullback and then potentially a flip around, go back the other way. Let me look at the euro again. So the news, you know, with the sworn testimony being leaked, not leaked, but released this afternoon, these markets heard that what was in Yellen's testimony. That's why they started running up today. They're front running it, right? You'll probably get some sort of a sell the news tomorrow to some degree. But that front running put pressure on the dollar, but as you just saw, the dollar doesn't even want to pull back hardly, even with the idea that Yellen is going to continue the same policies. Of course, you know, we all know that she's probably as easy money as Bernanke. So here's the euro. The euro got actually a better push. You got over the high here, didn't it? But 33. Yeah, it did. So the euro looks like it's going to try to get up to the next zone, which is up here, 133.71. Unless it fails and comes back tomorrow, a further push, which should be about halfway back, a little bit more. All right, if you do the Fibonacci stuff, that's probably like 38.2 or something. So those all look about normal. Let's go look at gold. All right, so gold. So remember last night we were talking about gold came in and tested here, right? So the scenario last night that you know, I was highlighting was that you had this swing point low being tested, right? And there just wasn't any volume on the test. And in this particular case, you know, when you got the test, what happened was you actually went under it, back over it, less volume, so you failed both on volume and price. That should lead to some sort of an attempt to go back the other way and to come back at least into this area, which is the top of the resistance zone based off of this large anchor bar over here. Today was an inside day. It is a doji, so this thing could turn and work back lower tomorrow, although based on the Yellen news after hours, this thing did shoot up. Let me see, this is 123.87. Let me see where it was trading after hours. After hours, gold, or GLD itself, was trading at 123, right at it, 123.85. So it's right at the top of this bar. If it gets over that bar, then it's going to try to shoot for this one. And that's the lowest 125.15. So another, you know, 15-20 bucks higher on gold itself, and that's not a bad setup the way it's trying to do it. Silver didn't do anything. Really didn't see much anywhere else. Let me take a look at the USO because that guy was trying to break down yesterday. Yeah, it's going to try to test again tomorrow. If this doesn't break tomorrow, you're going to see a decent bounce. And I believe that's in fact what you're going to see, and the reason for that is what I pointed out before, and that is that you tested here, you actually had higher volume, slightly higher volume, which means you'll probably try to test again, right? Which would be the test tomorrow. But if it can't break down and get underneath this, right? If it just can't get down and break, you had a sign here that this thing wants to go higher off this big bar on the way up. If this can't break, expect it to shoot back the other way and get back up in at least to this area probably. So if you're short this, be careful what you're doing. I wouldn't suggest buying it, but you have to be careful you don't get caught and all your short profits run away from you. Let me look at a couple I haven't looked at. DBA, let's see what the grains look like. Actually, it's broader now. It still looks terrible. The RJA, and then let me look at the bonds. Nothing there. So municipal bonds. Let's see what these look like. A little bump up today. That's interesting. So these really stuck. They can't go anywhere. Let me see what the junk bonds look like. Yeah, that looks better. And you would think the junk bonds on a big day up in the market would pick up, and that's what they did. They don't have much volume. We'll have to see if they can get back over resistance. The key bar, of course, is this big one at November 8th. Let's go look at TLT. So TLT yesterday looked like a buy. 2 days ago, excuse me. 2 days ago looked like a buy. You got the push up yesterday, and then you got the gap up today that test 104.11, 104.04. Oh, it didn't test it? Didn't test it. Just missed it. Well, that's interesting. I thought it actually tested today. So it's just shy of the test of the top of the bar and the top of resistance. I expect tomorrow it's going to fail here is my idea, and I'd already outlined this once before, and I'll just outline it again for anyone who didn't see this show. This area right here, the swing point low, and this little high, that area right there is going to be very hard to get through the first bounce. So my expectation is you come up to it, you fail, you come back down, you probably test back down into this area here, which is off of this large wide price spread fast move down. You probably hold there, and if you do, right, that's the better bounce to buy. And the reason it should hold has nothing to do with these bars, right? The reason to hold has everything to do with the anchor bars that are over here, right? It came into this area, right? The volume came out of it before it got there. When it got there, it had no volume, and it tested into a huge volume bar here and there. It doesn't have the juice. A pullback is probably going to set up a really nice buy to take you all the way back up, at least back up into this area, but potentially even higher. So we'll see. We'll see how we'll see how that one works out. But that's what that one still is setting up to do. All right, let me take some questions here. Can you look at VEL on the dailies, looking for a place to go long? Sure, let's take a look at it. So VEL is I think they're mostly iron ore and copper, if I remember right. Let's take a look and see what they look like. So, wow, they came off hard, didn't they? Volume expanding. Yeah, I don't know. I think there's better places to play than this one. I mean, you'll probably get the bounce, but your trade in this is more than likely, you've got a big bar up here at the top. That's where it tested and failed, and then it came off. Right? I don't think you're going to get much more. Oh, that was a nice little drawing. Let's try that again. I don't think you'll get much more than this at most. Potentially there at most up to here. quite draw that right, but right up in there. Right, so you could get a decent move up to here. I mean, that's possible. It may be just to here though. So you know, if you're going to get in this, I wouldn't stay in it because you got volume expanding as you came down. You did get the reversal sign today, so that's probably what you're looking at, and that is a reversal today. In other words, you came down fast. You're underneath it, back over it. That's a 2-bar reversal that can lead to at least a sideways tomorrow or potentially up. So tomorrow you probably get a trade out of it. I just wouldn't stick around if I did it. Another post here, gold up 1450 after hours. Yeah, I think gold's going to try to move. We'll see how Asia trades tonight, and of course Europe in the morning. I expect Europe's probably going to bounce right back, which probably has us even to higher in the morning. And if that euro holds and it was trying to push up tonight a little bit farther off the Yellen comments, I think gold's going to get a decent day tomorrow. And if gold can hold tomorrow and actually push up, you know, you may get a nice spike on Friday. Friday it tends to move. Folks, I'm out of time. Boy, that goes quick. I appreciate you joining me. Is taper off the table in your opinion? Is that why gold and miners should go higher? You know, this taper talk's going to be on the table. You know, my sense of what's going on here is if you repeat something enough, people will get used to it. And what they're trying to do is set the plate for taper. Right? They're trying to condition the market to not fear it. They're trying to keep telling us that, oh, when we taper, it's going to be because the economy is doing so good that we have to, right? Or that it's time. And so, yeah, I think to some extent, I mean, gold moves on two things. Fear, there is no fear. Not now. At least not now. And it moves on inflation. And there's really not inflation. There's just the potential for it. The move in gold, when it happens, if it happens, you know, it's a trade. Because it's going to be a while, probably, before we see inflation. I mean, they can push as much money they want into the system. If people don't use it, it don't matter. And right now, people still not using it. Have a great night. I appreciate you tuning in. Take care of yourself. I'll catch you tomorrow. We'll do the end of the week Thursday wrap. Take care. Have a good night.